Okay, today our topic is IS 12, which is income tax. And income tax is very important because it is the source of revenue for the government of every country. A country can make its income tax very convenient for the people to fulfill the deficit faced by the country due to the expenditure because the country government anchor expenditure. They invest money on public and they expect a revenue in the face of income taxes. So today our discussion is income taxes. IS 12 discuss income taxes. International accounting standard for income taxes is 12. You should memorize the list of international accounting standards as well as international financial reporting standards, because these are the basis of accounting. If you want to become accountant, if you want to design or working in a financial statements, so you first know about all the accounting standards worldwide. And now I'm going to word IS 12. IS 12 income taxes implement so-called comprehensive balance sheet method of accounting for income taxes, which recognize both the current taxes consequences of the transaction and events of the future tax consequences of the future recovery or settlement of carrying amount of an entity assets or liabilities. All right. What are the objectives of IS 12? The objective of IS 12 is to prescribe the accounting treatment of income taxes. Yeah, of course. The main objective of IS 12 to explain, to elaborate the income tax and accounting. Okay, income tax is very important. As I explained you in the beginning of the video, that income tax is the source of revenue for the government, so it is very important. And meeting this objective, IS 12 notes the following: and the inheritance and the recognition of the asset or liability recovered and settled in this recovery may give rise to the future tax. Tax is imposed on the salary income of a person. Tax can be imposed on the business of a person, of the company, of the AOP, association of person, which is called partnership, and tax can be imposed on income generating from other source. There are different heads of incomes, so you can easily understand this. And as you know that, everybody know that tax, finance, cost, these are the parts of income statement. Income statement, which we call the profit and loss account. All right, some definitions. The very important definition: tax base. The tax base of an asset or liability is the amount to that asset and liability for the tax purpose. Temporary differences. Differences between the carrying amount of an asset and liability in the statement of financial position and its tax basis. Taxable temporary differences. Temporary differences that will result in the taxable amount and determining the tax profit loss for the future period when the carrying amount of an assets and liabilities recovered or settled. What are deductible temporary differences? Temporary differences that will result in the amount that is determining taxable profit or loss for the future. Deferred tax liability. The amount of tax payable in future period in respect of temporary taxable differences. Deferred tax assets. The amount of income tax recoverable in future period in respect of deductible temporary differences, the carry forward of unused tax losses, the carry forward of unused tax credits. Now, the more explanation I added, IAS 12 prescribed the accounting treatment for income taxes. Income taxes include all domestic and foreign taxes that are based on the taxable profit. What are the domestic and foreign taxes? The two words important. Domestic taxes, which government deduct from your salary, deduct, withhold from your dividend. You invested money in the company's securities, so they withhold 15% in Pakistan. I'm giving you an example of my country, Pakistan, that they withhold 15% of your income. For example, your dividend is 0.1 million, which is equal to 1 lakh, and they deduct 15,000 of your 1 lakh, 15% on the 1 lakh, and if your dividend is equal to 1 million, so they would deduct 150,000 from your dividend. So this is your domestic. gain domestic tax, and the foreign tax is that your country's person went to other country and they invest money, and that particular country, for example in Canada and Dubai and Saudi Arabia and America, whatever the country is, they invest money, and the person is the individual of that country. For example, one Pakistani goes to America and he invests money over there and he earn money. You have to, a resident person should pay tax on the both of taxes, but a non-resident person whose tax time is less than 183 days in Pakistan just pay tax on the foreign income, because he is the national of Pakistan, okay, he is the citizen of Pakistan, okay. Overpayment of current tax is recognized in an asset. Current tax liabilities assets for the current and prior period are measured in the amount of expected to be paid, recovered from the taxation authorities. If the tax is overpaid, this is refunded. This is explained by the tax law of Pakistan, Tax Ordinance 2001. If you pay tax more than you needed, more than you are obligated for, then it is refunded, and the law by which you can get interest which is undeductible, okay. Okay, IAS 12 requires an entity to recognize deferred tax liability subject to specific condition. A deferred tax asset for all temporary differences with some expectation. Temporary differences are difference between the tax base of an asset or liabilities carrying amount the statement of financial position. The tax base of an asset or liability is the amount attributed to that asset or liability for tax purpose. All right, so this was all about the tax. Income tax is very important for every government because it is the main source. And tax, the concept of taxation is very interesting. Tax law is a flexible, but with the passage of time you can add new laws, you can increase the rates, decrease the rates with respect to your expenditure and venues of the government with the passage of time, and it is very elastic. Okay, it is a convenient for a taxpayer, for tax practitioner. It is necessary that they will be as a chartered accountant, other BCom accounts, and BS Commerce. The students do BS Commerce and many other graduations. You have to be, and you should use integrity, objectivity to pay the tax for the taxpayer. You are the tax practitioner. Okay, in the next lesson, see you, and thank you for watching.